Alrighty, friends. I am joined today by the illustrious Jana Fox, a certified credit reporting, credit repair specialist with Rescore. As a matter of fact, Jana is my go-to when it comes to needing credit repair done for my clients to raise credit scores, clean up credit, etc. And I'm, of course, your host, Ella Gurfinkel, Fairway Independent Mortgage, Team Ella. And we are talking about a few things today, but more importantly, the main topic of the conversation is going to be, how do I fix my credit fast? I want to buy a house or I want to buy a car. My credit is shot. What do I do? What do I do really fast to get to where I need to be? And how do I get there?
Yep.
So, Jana, we get this all the time, right?
All the time. Every day.
And typically what I end up sending you when I come across somebody who's in need of your services, somebody with either a sub 620 or a sub 580 credit score, I just end up sending you their credit report through a secure channel, basically saying, hey, take a look at it. What can you do? Let's help this person out.
Yep.
So it's on you, honey.
All right. So a couple things that are very helpful to know about credit is, first of all, if you don't have any trade lines, and anytime that you hear me mention trade lines, that means it's going to be credit cards or installment loans. An installment loan is going to be a home loan, auto loan, or personal loan. So if you don't have trade lines, you're not going to produce a score. So what I always like to tell people is a FICO score is not grading you on how well you stay out of debt. A FICO score is grading you on how well you handle the debt you're in. So I think that's so important to understand.
And I should say that the first thing that people need to understand about their credit, because that's, the thing I hear from so many is that this credit reporting system is screwing me over. I'm so screwed by credit. I am so, I'm in such bad shape. Friends, you have to understand that the credit reporting system as it stands is, as actually an expert I've listened to many, many moons ago put it the most apt way, is it's just a series of allegations against your good name. And unlike in the criminal system or in the justice system where you're innocent until you're proven guilty, when it comes to credit, actually you're guilty until you can prove yourself innocent. And that's where Jana and her company and her services come into play.
Yeah, that's a great way to say it, because that is how it is. And it's an algorithm. So it's all this data. The only thing that a credit report really is just collecting a lot of data and then producing a score from that. And what's interesting is a lot of people don't know, not to get on a rabbit trail, but there's 56 different versions of FICO. So you get so much confusion, and that'll lead me into the next topic. But within FICO itself, there's 56 different versions of FICO. So depending on where you're getting your credit pulled, let's say, and the very same day, Ella, you're going to apply for a credit card, an auto loan, and a mortgage. You're going to have 3 different scores pop up. And the reason why is they're using different versions of FICO.
Funny you should say that, because that is exactly to the T, same verbiage, something I tell all of my clients too, because again, there's a FICO score for mortgages. There's another one for auto. There's one for consumer credit, meaning credit cards.
Yes.
And I'm sure there is other versions for other purposes as well.
Yeah.
And this is, again, to the T, what I tell everybody is that you can apply for 3 different types of credit on the same day and end up with different results, because guess what? Each FICO score is a formula.
Yes.
That gets applied to your information, and a different formula will produce a different result.
Yes. And they're looking for different things. For example, if you're going for, let's say, a credit card, and they pull your credit, typically they're going to be using FICO version 8, but it's the FICO version 8 that concentrates on what your credit card history is. So they're going to look, do you max out your credit cards? How long have you had them open? How many credit cards do you have? How many of your credit cards are over the limit, or do you always pay them on time? So on and so forth. And that is a different algorithm than if you would go and apply for a mortgage. And the mortgage industry at this time, and for the last 20 years, has used FICO version 2, 4, and 5. Well, that's one of the oldest versions of FICO there is. And so they're going to be looking at things very different. So they're going to see, do you have installment loans, home loan, auto loan, personal loan? Do you have credit cards? I mean, it's just, they're looking for different things. And I always tell people, typically with FICO version 2, 4, and 5, you'll see that those scores tend to be a little bit lower than if you would go to apply for a credit card or an auto. And it's just because how I like to look at it, it's one of the biggest purchases you'll probably ever make in your lifetime, a home. So they're going to really look at everything underneath a microscope. It's just an easy way to remember that. Now that leads me into the next topic. So how many times do you run across people that say, hey, I looked online, I have Credit Karma, my score, let's say, is a 710, and then you pull my credit and it's only a 630. Well, now they're all kinds of upset, right? They think that maybe you've taken so many points from them because you pulled their credit. Well, two things about that. We'll talk about how many points it actually takes from you when you get your credit pulled, and a good rule of thumb, so don't let me forget that. But
Yep.
Credit Karma or any of the scores that you find online are not your actual FICO scores. They're graded very differently, and even their numbers are different. They typically start out at about a 500 and end at a 900, and FICO usually starts about a 300 to 350 and ends at an 800 or 850. And again, they're calculating everything different. Another really big difference between the online scores like Credit Karma versus FICO is it takes 6 full months of payment history to get a score to produce in FICO. So if, let's say you've never had any type of credit at all, and then you get a credit card, it's going to take 6 full months of paying that to produce a score. Now within Credit Karma or any of the other online scores, you'll hear them called Vantage scores, any of those, within 30 days, it produces a score. So you'll really see a very big difference when you have someone that has a very thin or young credit profile with FICO versus Vantage or like the Credit Karma. You'll see a big difference there. The other thing is Vantage doesn't grade as harshly, like it doesn't calculate medical collections like FICO version 2, 4, and 5 does, that the mortgage industry pulls. The other thing it does is it grades pretty heavily on credit card usage. So let's say you have 2 credit cards and you're an authorized user, it's going to look like you have a very high score. But then when you go to talk to a lender and they pull your actual FICO score, it's going to be, I would say, anywhere between 30 to 50 points less, sometimes even more than that, the thinner your credit profile is. Now, the thing that is very, very good about Credit Karma and the other online scores or Vantage scores is it gives you the opportunity to monitor your credit, which is highly, highly important. I can't stress that enough, especially in the environment we are today, especially after COVID, the yucky C word I never like to say. But because of that, so many people online shop and they've continued to do that. So identity theft is very much on the rise. And that's not a scare tactic. It's just, it is the environment that we're in.
And it's not just identity theft, to be honest, identity theft is just one side of it. There's been, as I'm sure everybody has heard, there's multiple cyber attacks on all kinds of financial institutions.
Yes.
So it's not necessarily identity theft against a person individually. It could be just a data breach or cyber attack against a financial institution where they bank or that they've used or where they paid. And therefore, they can be staring down the barrel of ID theft without even knowing that it's ever happened.
Yes.
So to that end, yes, I'm a huge fan of monitoring services for that reason alone.
Yeah.
Not to necessarily monitor the credit scores, but to monitor what's on your credit and to basically protect yourself against the breaches, against all kinds of potential ID theft, ID fraud. And by the way, if you are a victim of the breach or a cyber attack, the institution that had your information that was part of the data breach or cyber attack should be providing you with the free credit monitoring, credit protection for what, up to a year?
Yes.
So always take advantage of that. Absolutely, always take advantage of that.
Yeah.
The other thing too, and I'm sure, Jana, you will second me on that one, I'm also a huge fan of annualcreditreport.com.
Yeah. Yes.
So tell everybody about that a little more.
Well, you know what's interesting? With annualcreditreport.com, you can get one per year. Now, a lot of people get confused once they get it. It's not going to have a score on it, but it's going to give you the body of the report. So I've had people call and say they messed up. They didn't send a score. Well, they're not going to send you a score. Right. And actually, a lot of people don't know this either. The bureaus are the ones who collect the data, and then your scores are actually produced. The bureaus don't produce a score. FICO produces a score, and it takes the information that the bureaus are sending them to produce that score. So when you request an annual credit report, it's not going to have a score, but you want to pay attention to the body of the report. And even with credit monitoring, when you're paying attention to the body of the report, the thing about the score is if your score is going up on, let's say, Credit Karma or Smart Credit or what have you, it's probably going up with your FICO. So you're not going to see it where it's like plummeting with Vantage scores and going up with FICO. Does that make sense? So they're
it's
pretty much like
direction.
Yeah.
It basically goes in the same direction. If
Absolutely.
your credit monitoring or even Credit Karma is on the uptick, then most likely your normal or mortgage, I call it normal, but because it's my life, but the mortgage credit score effectively will also go on the same trajectory.
Exactly, exactly. And as far as how much it takes, people say, oh, I don't want you to pull my credit again. I'm so worried about, my points dropping. So consumers have a little more wiggle room than I think that they actually realize.
Hmm.
So first of all, you can get your credit pulled 10 times in a 12-month period without it negatively affecting your credit. That's actually
I just
quite a
learned
bit.
something. I actually just learned something new. That is freaking awesome.
Yeah, 10 times in a 12-month period without it negatively affecting your credit.
Wow.
Yeah. The other fantastic thing is when you are going to apply for a mortgage, let's say somebody accidentally like loses their mind, watches a commercial, and they decide to apply for a home loan, which I don't know why they would, but with, let's say, Sprocket Mortgage. It like rhymes. Yeah, I don't want to talk bad about any mortgage company, but
We
it
never do.
rhymes. Yeah, but Sprocket Mortgage. Okay. So let's say that they apply for that and then they realize, oh my gosh, this was a mistake. I should have went to a good lender, reputable lender that doesn't have a jingle, because anytime your lender has a jingle, that's a lot of money. You're paying for that. Like why Sprocket Mortgage on like Super Bowl and stuff like that? The consumers are paying for that. So a lot of times they don't realize that. But when
Right.
you want to get to the closing table and you're purchasing a home, by golly, you better get somebody that really cares about you getting to that closing table and someone that has probably ran across hiccups before. Because when you have a loan officer that knows how to handle hiccups, like Ella, she's been in the business forever, you want to stick with that. Do not do the 800 number type stuff. That's just professional advice. But however, let's say you lose your mind, you apply for like Sprocket Mortgage, and then you're like, oh, shoot, I shouldn't have done that. I want to talk to someone else, but I'm worried because I have my credit pulled. You have what's called the right to shop. So that's going to be a 14-day window to shop as many mortgage companies as you want to without being penalized. So what's so great about that is that gives you that window of opportunity to pick someone that fits your needs. The other thing about it is if you Google that, you want to make sure I know what I'm talking about, so please do. You'll see headlines that say 45 days. Those are for the newer models of FICO. So FICO version 8 and above. So there's FICO version 8. Then in 2020, FICO version 10 came out. So those are 45 days. But within FICO version 2, 4, and 5, you have a 14-day window with TransUnion and a 30-day window with Equifax and Experian.
So now I stand corrected because I've been telling people it's actually 30 days. I mean, I knew about the 14 days. That was, from a few years back, as in few years back.
Mm-hmm.
But 30 was my understanding was the new thing.
Yeah.
And now you're telling me that it's still back to the
Yeah, 14. So 14 with
wow.
TransUnion and 30 with Equifax and TransUnion or Equifax and Experian. Now, the thing I would say though is, let's say, for example, you're past that 14-day window or even 30-day window, really. So let's say you're past that 30-day window. It's a percentage of your FICO that's taken. And it's not like, hey, you got your credit pulled 6 times, we're taking 60 points. It's up to 10%. Now, don't get me wrong. We want high credit scores. We want to get low interest rates, right? But if it's a trade-off, you want to make sure that you're working with a good lender that knows what they're talking about. That's more important. And then also remember that you have 10 times in a 12-month period. So if you haven't surpassed that 10 times in a 12-month period, again, you have the green light. Go ahead and shop around and do that. Now, I do want to point out, because I've had a couple people get confused about this, the right to shop is shopping as many mortgage companies you want to. That doesn't say go shop for a car, go shop for a mortgage, go shop for a credit card. Those are going to be different. So you have a 14-day window to shop as many mortgage companies as you want to. Or you can say 30 with Equifax and Experian.
Isn't there also so I wasn't entirely wrong, I guess, on the 30 days.
No,
It's
no.
just okay. Awesome. So I haven't lost the rest of my marbles just yet, even though it's been, it's the season. But I understand the same also applies to shopping for a car because that's the next biggest purchase that people usually make besides the home, right?
Yeah. The tricky thing about cars is so when someone is applying for a mortgage, it's going to be pretty much, and this is going to sound kind of silly, but it's pretty much the same code that's being entered. So everything with reports is just code driven. So it's the same code. With vehicles, with an auto loan, a lot of times it's different codes. So that's the reason why, and they'll shop different versions of FICO. So it might be FICO version 8, FICO version 9, FICO version 3, what have you. So then that's the reason why you'll see so many hits.
I've seen, good God, somebody would go to one dealership and it will
25
produce like
hits.
15, 20 hits
Yeah.
and hits. When we refer to hits, that's basically
Oh,
inquiries on your credit
yeah.
report.
Yeah.
So when Janet just mentioned 10 in a year, one trip to the dealership can produce twice that.
Yes. One thing I always tell people is if you have a relationship with your local bank or even like your credit union, talk to them first about financing that vehicle just so you can save yourself from, because think of it this way, the lower your scores are, the harder that they are going to have to work to try to find someone to take that loan. So they're going to be hitting multiple places. Now, I don't think they're doing it maliciously at all. They're trying to get you into a car, so they're going to shop as many places as they can. So if you have, let's say, a lower credit score and you have to have a vehicle, try to get something set up with your local bank or credit union first. Go to them first, talk to them about that, what's your options. And if that fails, let's say you don't like the terms or what have you, then when you go to the car dealership and you're talking to the finance manager, let them know, say, hey, you can pull my credit from 3 places and please do not pull it any more than that. So 3 places, if you can't get it, come back and let me know. And then let them know, like, I monitor my credit every month. My scores are around, and just kind of let them know what your Credit Karma scores are or what have you. But maybe take 30 points off of what Credit Karma is telling you to give them a really good idea of where you're at. But that's what I would highly recommend for that. And then that way you're not getting hit with all kinds of hits or, like you said, like inquiries, and you're keeping that at bay. You don't want to lose points over that.
And the other thing too about inquiries, no less important to know, that you can go shop at one bank, at one mortgage company, at one dealership, let's say, even for the auto loan. But what we see on our side on the credit report is 3 inquiries. So not one, you're applying one time, but it's multiplied by 3 because there are 3 bureaus.
Yep.
So each inquiry counts for each bureau. So you may be applying one time, but it's a tri-merge or the 3 bureau credit report being pulled. So it will show up as 3 inquiries. So going back to the 10 a year, that's really 3 actual.
And it's important too that, especially around Christmas time, we'll see this a lot. Do you want to save 10% for applying for the credit card? No. And I will tell you too, when you are establishing credit or you have credit, major credit cards are much better for your FICO score than department store cards. So that's really important to know that, because if you're going to get a credit card, I would highly recommend getting a major credit card versus a department store card, just because at the end of your credit journey, like, you want to have what's going to give you the most points. So that's something. The other thing too, credit cards are an excellent way to manipulate a FICO score in a positive direction if you use them wisely. Credit cards are not a substitution for money. They're not. And I am never an advocate of getting into debt. I've seen horror stories. I've cried with some of our clients. Well, probably because my zodiac sign, because I'm a huge heart, but I've cried with some of our clients because they've gotten so far into credit card debt. So you will never find me advocating getting into deep debt. What you will hear me say is you need to play the game correctly. So in order to have a FICO score, you need to have trade lines. You have to think of it like this. If you don't turn your homework into your teacher, they have nothing to grade you from. If you don't have trade lines, FICO literally has no idea if you're a good candidate or going to pay that money back. So keep that in mind, but use your credit cards. And I would say a good rule of thumb is to have 2 to maybe 3. Like, for example, with me, I have 2 credit cards and a business card. So I use my business card, obviously, for business purposes. I own a business. I have to have that. And then I have 1 credit card that I use for my gasoline and 1 credit card I use for groceries. So I just use those like they're debit cards. I have the money in the bank. I use that. I'm making sure I'm using it, and then I pay it down. Now, here's the other thing a lot of people don't know. Paying your credit card balances off to about 3 to 5% is better than a 0 balance. When you have a 0 balance, it doesn't grade as well as having a little bit of a balance on your credit card. The other trick is you always want to keep your credit card balances at 30% or below. Never go above that. The moment that you do, you're actually harming rather than helping your scores. The other trick with credit cards is, let's say, and I've been there, let's say that you are in a situation that you're living paycheck to paycheck. Okay, you do not have a choice. You cannot make any more payment on your credit card other than your minimum payment that they want you to make. Pay about $5 to $10 more than that. It tricks the algorithm that you're paying more than your minimum, and you'll get some points for that. So a lot of people don't know that. So when you're in that tough spot that you can't be throwing $500 down or $1,000 down a month to get that paid down, pay just a little bit over that minimum, and it'll trick the algorithm. It works every time. The other thing I wanted to tell you too, and I don't want to forget, so since it popped in my head, the other thing a lot of people don't know is, so this whole bureau thing, it's a money-making machine, right? It's a money grab. So,
So let me stop you for a second,
huh?
because what most, and I talk about it in some of my other videos as well, is that most people don't realize, and you may want to educate the viewers, listeners, etc., on this, that the bureaus are not government entities.
Oh, absolutely not. No, absolutely
Yep.
not. And that, I
And
think
they're
that's a
for
big
profit
surprise.
entities. Yep.
Oh, oh, profit. Oh, profit. Girl, they're not hurting. I will tell you that. We all look like peasants next to them.
Yep.
Yeah. Oh, yes. I mean, anything you do with the bureau, it costs money. If you report to the credit bureaus, it costs money. If you get a credit report, it costs money. It's a money making machine all the way around. And so when a company is reporting to the bureaus, they have to pay money to have anything negative or positive placed on that credit report. That's the reason why you'll see sometimes where something will be showing up on one credit bureau like TransUnion, but doesn't show up on Equifax or Experian. It's because it's costing that company money. And so they're choosing just to report to one bureau instead of all three. So
And
that's why
it's
we
more
get that.
common from what I've seen. I was just going to actually ask you about that, but it's more common from what I've seen is with either negative accounts, meaning collections, they usually will report to only one or two and not all three,
Yep.
or the smaller financial institutions. So the
Yes.
big guys, they honestly like the Bank of Americas, the US banks, the Chases.
Yep.
I mean, frankly, my dear, they don't give a damn.
Nope.
So they pay
No.
the money for the reporting, they pay the money for the reporting, and good luck getting that cleaned up.
Yep.
But
Exactly.
the smaller institutions who do mind the P's and Q's financially, they a lot of times will also only report to one or two out of the three. And hence the huge, huge, huge disparity that we see between the credit scores for the same person, for the same
Yes.
information, effectively, you would think,
Yes.
on the credit reporting or on the bureau. And I've seen it where, it comes in where one of the bureaus is at 610, for example, and then the two others will be at, high sixes, so
Yes.
670, 660. I
Yep.
mean, that's a hell of a lot of difference right there. It's a gap. 610, 660, 670. Are you
Yeah.
kidding me? And then we start looking, into the actual report, and lo and behold, it's something negative that
Yes.
crept up to that one specific bureau.
Yeah.
And usually I think it's TransUnion, isn't it?
Oh, I find it's mostly TransUnion. And I don't know, honestly, I don't know if their rates are a little bit less expensive than the other two, but I have noticed that it's And the other interesting thing too is a lot of credit unions that are small, they don't have the funds to be reporting to all three bureaus. They will typically report to TransUnion, which I find fascinating. So it leads me to believe that maybe they're just a little less expensive than the other two are.
And then it really skews the whole credit scoring bit because, again, in mortgages, we look at the middle score. So
Right.
if one of your scores is 610, for example, well, 660, 670, guess what? 660 becomes your middle score. So
Right.
that really does affect you in a major negative way when stuff, I'm watching my P's and Q's, even as blunt as I am, this is going out to the public,
We're both doing really well.
right? um, the the middle score will get really, really skewed by one extremely lower score by
Yeah.
what's being reported there.
Yeah. And
The
don't
other
you
thing
find too, a lot
too,
of people don't know that the three bureaus are very separate from each other? I think people get this concept that they're like in unity. They're not. They are very separate from each other.
that's a great point, isn't it? Again, TransUnion, that's actually a British company,
I think it's Equifax that
or
is.
is it Equifax? I get those. Sorry, I do
Still
get those
mixed up.
confused.
I know. So do I
But
though.
they're not even. They're not necessarily even U.S. based.
Yeah. No, it is. It's for sure Equifax because Experian is down in Georgia, if I remember
Right.
right. And TransUnion is also in the state. So yeah. And actually, technically, there's like 7 main credit bureaus, which a lot of people don't know, but it's the 3
Right.
that most of us know. But there's actually way even more than that.
Well, there is Dun and Bradstreet on the business side, which,
Mhm.
unless you're in business, you wouldn't know about it because it has no implications.
Right.
But yes, there is multiples, but those are the big whales
Yeah.
that we unfortunately have to contend with in my professional life. And unfortunately, my friends, you have to contend with them for pretty much everything credit related on your side because it's buying a home, it's financing a car, it's frankly getting
It's getting a job.
insurance,
Getting a
getting a
job.
job.
Yeah.
Exactly.
Getting a
Your insurance
promotion.
rates, yep,
Yes.
are credit score driven. Promotions can be like, there are some jobs that you can't even get if your credit is damaged.
Yeah.
Because that's a security risk.
Yes.
So, I mean, we're talking about the financial institutions typically, or financial sector, or we're talking a lot of the government jobs.
Oh,
So
absolutely.
the credit has a lot more implication to a lot of people than they realize
Yeah.
ever.
Yeah. And you don't want a number to keep you from being able to get that promotion. You don't want a number to keep you from being able to have good insurance rates. So when you understand the rules of the game, and I will say the main thing to do is, first of all, when you have a credit card, don't close it. Keep it open until your grandchildren have children. History is so very vital to having a good, thick credit profile.
The
That's so
biggest
important.
mistake I've seen actually clients make over the years, and that's where I love getting to talk to the clients way before they actually start their home buying process,
Mm-hmm.
so that we can address the elephants in the room and we can answer the questions and prep them and basically hopefully prevent them from making some major mistakes.
Yeah.
But this is actually one of the biggest ones, and you nailed it. I've seen people literally say, I've been getting ready to buy a house. I closed all my credit. I paid it down.
I know. Doesn't it make you sick to your stomach?
Oh my God.
I
And
know.
at that point, there is nothing you can
Nothing.
do to bring
Nothing.
it back, because once you close it, you close it. You
Yes.
know, the other thing too is if you don't use it, you lose it.
Yes.
That's the other piece of it. Because
Yes.
again, one of my favorite pointers I've learned over the years is the longest credit cards that you have, the oldest, are the ones that score you the most points. Of course, if they're
Yes.
in good standing and stuff, but
Yeah.
you still have to use them. And closing your credit, like I said, it does absolute damage, like
Oh,
indescribable damage to your credit. So thank you for
horrible.
bringing that up, Jenna.
Yeah. You know, the other thing that I see a big mistake that people do, and honestly, before I got into the credit industry, I would have done this exact same thing. So someone will have a little cash, let's say, oh, I got a settlement, I got whatever. So I have $6,000 in cash. They think they're helping their credit by going and paying off like their car payment, their truck payment, whatever. Guess what happens with your scores when you have an yes. So let's say you pay your truck payment off. And that just fresh on my mind because I talked to this gentleman that did this. So excited. He paid $18,000, paid his truck payment off because he wanted to go buy a house. Now, that's great for your pocketbook every month because now you don't have that car payment, right? However, don't get sideways and think that that's going to help your credit because he paid off his truck. And guess what his scores did? This. And after 90 days, it started going down because he didn't replace that installment loan with anything else. So when you have a chunk of change, if you want to make a difference on your credit score, go straight to those credit cards. Pay your credit card balances down to about 3 to 5%. So you do that and then make sure you keep them open. Don't let them go down to a zero balance. And you never want your credit cards to go to a zero balance for more than 90 days because they go dormant and they'll close them out themselves. So you want to make sure you keep them open. And the older your card is and the lower your balance, the better your FICO scores are going to be. So that's so very, very important. The other thing a lot of people don't know is like when you go to apply for anything, a credit card, a home, an auto, the bureaus are lovely enough to sell your information. So isn't that so nice of them?
You're talking about triggered leads.
Yep. So what happens is you'll notice when you go to apply for a home loan, all of your clients will start getting just pounded with spam calls, emails. Hey, do you want us to do a home loan for you or whatever? And it's because the bureaus shut out that information. The other thing that they do, it's called sandbagging.
They didn't just shut it out, they charged for it.
Yes.
Other companies.
Yes.
So that's,
yes.
I call them vultures. I freaking
Yep,
call them
they
vultures. I'm not shy about it.
They are, and
But
then and it's a money making machine, right?
Yep.
So that people are asking for leads, the bureaus sell them, see they're making money everywhere. So to avoid that, one of the very good things that you can do is you can go to www.optoutprescreen.com and that keeps that from happening. And I think that is very important. And if you do it every 5 years, and it's funny because about 3 years ago, my opt-out pre-screen had expired. I kind of forgot about it. If you ever question if that stuff really works, I mean, I think it was the day after it expired. I don't know, but shortly after it expired, I started getting hit with all kinds of spam stuff, all kinds of calls. You want this, you want this. And I'm like, what is going on? And I thought, oh my gosh, my opt-out pre-screen expired. So you need to do it about every 5 years.
So it's not only the spam by phone and the spam by email, it's also spam in the mailbox too.
Oh, absolutely.
Because it cuts down on the amount of round file material.
Yeah.
Just like that.
Yeah. Yeah, and it takes about 3 to 5 days for them to process that. But I would highly recommend doing that just because it really does keep all the spammers and the vultures away. The other thing that's interesting is the bureaus will give information or a heads up to collection companies. Let's say a collection company, and remember, it costs them money to report to the bureaus. So let's say a collection company has had a collection for like 3 years, but that consumer really hasn't done anything. They're credit shy at this point or credit paralyzed, like I like to say. The moment they apply for something, especially a home loan, the bureaus will alert the collection companies and say, if you have any collections for, let's say, Mr. Smith, he's applying for something, throw it on the credit report now. It's called sandbagging. And so that's the reason why you'll see when someone applies for any type of loan, suddenly it'll look like new collections popped up. They're not new. They've been sitting there. They're just waiting for that person to have a why.
Wow. See, I wondered why there are so many new collections popping up for people, especially when the collections, it will show the origin date, I don't know, 4 or 5 years ago, and now it's brand freaking new again.
Yes, that's why. That's why, because it's a money-making machine. So be very aware of that can happen. Now, here's the other thing, too, is once that collection gets thrown back on the credit report, be very, very careful, because if you just go and pay it because you're trying to make sure you can get into that home loan, you can actually damage your scores. Paying a collection does not just remove it automatically from your credit report. All it does is it states that it's a paid collection versus just an open collection, and you can lose a tremendous amount of points. So
I love you for saying it, because that's a topic that I keep, drum beating into all of my clients' heads.
Yeah.
Again, oh my gosh, we're going to buy a house. We paid all our debt. I'm like, when you talk about debt, did you pay off credit cards? Yeah. Or are you referring to collections? Because yes, a lot of people refer to them as debt. So please, when you're talking to a mortgage professional like myself, be a little more upfront. Don't lump collections in with debt, because collections are collections and debt is actually good stuff. Like credit card.
That's a good way to say that. Yes. Collections are collections and debts are the good. Yes, exactly. And I think that gets so confused, and they think, oh gosh, I have this medical collection I need to take care of, or I have this Comcast, cable bill that needs to be taken care of, and they pay it. I had a gentleman that lost 80 points for paying a $40 Comcast cable bill, $40 from 5 years before when he was in college. 80 points. He had more points taken from him than dollars he owed. And it's very hard to get a paid collection removed from a credit report. So before you do that, you want to get a hold of the collection company. Let's say the debt is $300. I have $300. I'd like to go ahead and make this right. Please listen to when I say this, before I send you any payment information, you need to send me something in writing. It can be snail mail or email. It needs to have the company letterhead, meaning the collection company, and it needs to state this debt will be removed, not paid in full, not showed satisfied. It'll be removed from my credit report. And then once I get that in writing, I will send you my payment information. That way it's actually removed, and you need to keep that letter in writing in case they don't remove it and they just slap a paid collection, because then it's not a he said, she said little fight, squabble. It's actually in writing, and we can do something about that. But it's really important it has the word removed.
Absolutely. So I know we've covered a ton of ground on a variety of credit-related stuff. Let's give everybody a little bit of a treat and tell people what they can do in short order, what tricks of the trade you can suggest or share for our people to actually be able to raise their scores or clean their credit up in short order. And of course, if it's more involved, obviously, like collections being deleted or validated, or validation information needed. Obviously, I more than recommend you with your company rescore. You guys have been amazing. This is a plug, big time. But again, 4 years that your company has been around, I've sent clients and we've seen amazing results. And even before then, when we met a few years back prior to, you know what you're doing. So
yeah,
tell my people, tell basically those who would be watching, listening, etc., what somebody can do, like I said, in fairly short order to improve their credit, especially if they're thinking of buying a home.
That's a really good question. So the first thing that I would do is I would look through my credit report and see if there's any medical collections in there that I could take care of. The reason why is because of the No Surprise Act that was passed in 2021. Now, when you pay a medical collection on your credit report, it's actually removed rather than showing up as like a paid collection. That's one of the first things I would do. If that medical collection is 5 years or more and you don't have a lot of cash, maybe leave that alone. Okay. So if you have a medical collection that's 5 years or less, go ahead and pay that off, because collections are pretty detrimental to your credit scores. And it's a fast and easy way. Within 30 days, you're going to see your points improve. And those collections, those medical, it only covers medical, but those medical collections removed from there. That's the first place I would look. The second place I would look, and if you don't have any medical collections, or if your medical collections are 5 years or more, the next place I would look is your credit card balances. Like I said a little bit ago, credit card balances are an excellent way to manipulate a FICO score in a positive direction if you utilize them correctly. So I would go to my oldest card and I would pay that down as low as possible. You can get them down to about 3 to 5%. That's ideal. If you can't, if your budget just doesn't let you, then get them paid down as low as possible. The goal is to have every single credit card 30% and below. Very, very important. The moment it goes above that, it hurts.
Now, here's a question on that end. Another way to manipulate the credit cards is, especially on the older ones, is ask for a credit limit increase.
Yes.
Yes or no?
Yes. And now what you need to remember is if your credit card balances are really high, they're very, very close to the limit, that credit card company is going to be like, I don't know, because I kind of think maybe you're not going to be able to pay it back. So when you are calling for that increase, make sure your credit card balances aren't really, really close to the limit. Try to get them paid down, pay it on time, obviously, and then get it paid down to about 30%. Then ask for an increase. They'll give you an increase that quick. They want you to spend money. You don't call them up and say, I want to increase my score. So they want you to spend money. So that's what I would do. But they're going to be a little more wobbly about it if your balance and the limit is right next to each other. But that's another excellent way. Let's say you don't have a lot of cash. Your credit card balances are already 30% and below. I would call those credit card companies. Takes a couple minutes. See if you can get the balance or the limit raised. So that's another thing that you can do. Now, let's say you have a married couple or you have a young adult, like I have young adult children. So they have a thin credit profile. One of the things that they could do is they can become an authorized user to someone's credit card. Now, what I always like to tell people, they are not going to be impressed with you if grandma and grandpa has a 15-year-old credit card that they pay on time every month and you're an authorized user, but you don't have any credit in your name. Their underwriting is not going to be impressed with that, okay? So becoming an authorized user on someone's credit card is going to jumpstart your ability to be able to get credit in your own name. The other thing that it does is offsets a thin or a young credit profile. So let's say I have somebody that's 22 years old. They have a credit card, only one, that's 12 months old. But they have a spouse or they have mom and dad that have a credit card that's been open for 5 years or more. They can be signed on as an authorized user, and now they look like they have longer history.
As a matter of fact, case in point, we're closing a purchase next week for a young couple. When they came to me earlier this summer, she had the credit scores. He didn't have it all because he really didn't. Well, he basically paid cash for everything.
Right.
Which there is nothing wrong with it, unless you want to buy a house. Cash
Correct.
is king. Again, as I tell everybody, cash is king until you want to buy a freaking house.
Yes.
Then it's not.
Yes.
We used actually exactly that. I've had the girlfriend, fiance, whatever, add the boyfriend, fiance, to a couple of her cards. And within 60 days, I want to say, if not less, we had a viable credit score for him.
Yeah.
And now we're closing in a house less than 6 months from when we started.
Yes.
So essentially, they followed the advice and voila.
Yes. And it's excellent, especially with married couples. It works so well. And that's why I always tell people when I'm helping someone's credit, and they mention something like, oh, I'm married or my fiance or whatever. I'm like, okay, do they have fantastic credit or do they have credit cards? Yeah, they have credit cards. Okay, let's piggyback off of that. Now, you obviously don't want to go to your neighbor and be like, hey, Bob, how are you? I love how you take care of your yard. Can I be an authorized user? Weird, right? But when it's someone like mom, dad, grandma, grandpa, maybe a close aunt or something, and significant others are really a great way. And then remember to start establishing credit in your own name. So that's really, really a fantastic way to do that. So removing medical collections, paying down credit card balances as low as possible, becoming an authorized user if you need to do that. To jumpstart your credit is another excellent way. And then really understanding and looking through your credit report, monitor your credit report. That's so important. And in fact, I just, in this last month, I haven't even got to talk to you about it yet, but this last month I have availability with the credit monitoring company. It's out of the 13 years I've done this, this is the best credit monitoring company I've ever ran across. But not only does it help you monitor your score, but you can tell exactly how much to pay on your credit card balances, the date to pay them, and when it'll show up on your credit report, and it'll tell you how many points you'll get. There's no guessing anymore. Then the other fantastic thing is you can go on there and you can remove your name from everywhere that it finds on the internet. So I went ahead and I switched my credit monitoring. I went on there. My personal information, Ella, was on 21 sites. 21. So I went through remove, 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 remove. But all of those sites, they're selling my information like crazy, like hotcakes. So this credit monitoring is able to get rid of that too. You have that, and it's a $1 million ID theft policy for the household. But make sure, the point of that is monitor your credit, though, with a good credit monitoring, that you have other tools just besides for Credit Karma said I'm a 760. Like make sure it can do things and protect you. And I think that that's a thing that has got lost in all the commercials and what's your credit score and everything like that. You want something that protects you. It's so very important, and you want to be in the know. So I can send that link over to you just so you can play around with it and look at it.
That'd be awesome.
Send it to anybody that wants to, but it's $26 a month. That's it. That's more than what most people spend on one trip at McDonald's.
True that. I mean, that would be awesome. Now, a couple other things that I want to touch on before, we sign off. The credit boost, I believe, is what's, the TV, going back to the TV jingles.
Yeah.
The self-reporting and the credit boost, because those are the two things that I'm starting to run into now more and more, especially the self-reporting.
Yes.
Can we touch on that before we...
Yes. You know what? Thank you for bringing that up, because that's so important. I get a lot of those questions as well. So with the credit boost, you need to understand the actual animal it is and know what you're signing up for. So first of all, it's not going to really help you for FICO version 2, 4, and 5, even though you may see it.
It's not going to help you where it matters, actually.
No, not really. I mean, the only time that I think that it's worth it, and every once in a while I've told people about it, but the only time I really feel like it's worth it is, let's say you need to apply for a credit card, or you need to apply, you're maybe getting a home loan, an auto loan. It can kind of help. Now, first of all, it's only on one bureau, so understand that. It's not on all three. You're going to get a little bit, a point increase. However, you're letting them have access to all of your information. All of your information. So they know what's going on with your bank. They know what's going on with your savings account. They know what's going on with that. Me personally, I don't feel like the 5 to 15 extra points is worth them Experian being able to dig through all of my stuff.
See, my answer would be, no and hell no. That's an invasion of privacy that I'm also paying for. So, no.
And you get maybe 5 to 15 points, and that's on FICO version 8, 9, and 10. FICO version 2, 4, and 5, it doesn't even help the score at all. So the only time that like I said, I think it would help is if you don't mind them having Big Brother having access to all of your banking information, and you want 5 to 15 points. They do those commercials and give you a very false idea that you're getting something great, and you're not. You're just giving them all your information.
Yep. What about the self-reporting? Yep.
We know we could talk about that forever.
Yep.
Same principle, like the self-reporting. There's a few places like there's been some rent places that I've liked that if you can get your landlord to report to the bureaus. So, kind of self-reporting. You can get your landlord to report to the bureaus, and then it gives you a little bit of thickness to your credit profile. Again, most of these things aren't the big bang that people think they're going to be.
With the rent, I actually would be wholly in favor of it, and I love it when I see rent because all of the automated underwriting systems have been changed as of late to actually take the payment of rent into account.
That's amazing.
So that can actually be a huge positive. But when I talk about self-reporting, mostly it's the utilities.
Yeah, which again, the juice isn't worth the squeeze. Now with rent, it shows like, hey, I've been renting for 7 years, and I can show that I can, because most of the time, a mortgage is about the same, if not less, than rent. So it's showing that you have that steadiness that you can pay that. So I like it but you have to find a good rent company that's going to report every month and not be hit and miss. There's actually rent companies that are very hit and miss with that. So those are really good. With utilities and stuff like that, again, you're talking about a very small percentage that it's going to go up, and you're giving them access to all your information. You're talking about the newer versions of FICO that's even going to show up on. It's helpful, but it's not the big bang. It's not going to give you 50 points.
It's basically one of those, and the reason I brought them up, actually, and it's one of those things that where, people come to us, well, I saw it on the internet.
Yeah.
Well, freaking great. Not everything on the internet is always true, and that's why I like to bring the experts and like yourself and basically tell it straight up, very bluntly, very directly as to what really the story is or what needs to be done.
Yeah.
And again, that's really the biggest reason why I'm doing this is just to spread the true information,
Right.
and to educate the clients with the right sort of information, not just the internet rumor mill, essentially.
Well, the internet is self-serving. So you always have, what's the money trail? Like, what's that person or company going to get out of me being intrigued by this or signing up or what have you? So always go with the money trail. And I will tell you too, for anybody listening, if you're looking for a credit repair company, there are a handful of, unfortunately, not fantastic credit repair companies, just like any other industry. But then there is a really good handful that are ethical, they care about their clients, and they want to help them out. The things you want to look for in a credit repair company, even, don't want to use rescore or whatever. It's very important you know what you're looking for. You want to make sure that they partner with, are owned by, or work alongside an attorney. The reason why that's so important is because really, truth be known, a consumer can do more for themselves than a credit repair company can unless they have that attorney piece. That's very, very important. So when you're interviewing credit repair companies, and you should always interview a credit repair company, do not hear a commercial or what we promise 30 points or more. Any company, any credit repair company that says that they're going to give you a certain points, that's a red flag. You can't
it's illegal, actually, to begin with.
It is. It is. I'm surprised every time I hear one on the radio. I'm like, how are they getting by with that? And of course, about a month later, you don't hear it anymore, but they tried as long as they can. So you want to make sure they have that attorney piece. The other thing you want to make sure is they only charge you for the negative items removed from the credit report. If you are paying every month for credit repair, regardless if they get something removed or not, what's the motivation for that company to get it repaired and to get it repaired quickly? It's better for them to drag out the process.
So we're not going to mention a company, but we both know what you're talking about.
Yes, we do. So when I get people that call me and they say, oh, I've been with this company, I'm not going to mention names, but I've been with this company for 4 years. I'm like, what? What? You've been paying every month for 4 years for your credit to be repaired? They just don't understand. So
show me the result.
Right. Yeah. Like what? So when you pick out a credit repair company, make sure you're only paying for the items removed from the credit report, because then you're going to get them. I mean, their motivation is let's get this removed from the credit report quickly, because that's how they get paid. So that's really important. And then the other thing is good open communication. If you don't know what's going on with your credit report, or if someone just goes in there and disputes a bunch of negative items, but they don't tell you, hey, you need to get a credit card. Hey, you need to pay your credit card balances down. By the way, you can pay your medical bills now and not even pay me to do it, and you can get them removed. If they're not educating on top of that, you need to find a different one. So those are the 3 things that you really, really want to look for in a credit repair company when you're choosing, because this can really affect, if they don't know what they're doing, it can really, really affect your availability to be able to purchase a home. I think that's so important.
Jana, you've been amazing. I love working with you. I always love the information that you share so freely, that, you are an absolute, walking, talking encyclopedia when it comes to credit. I absolutely love that. And I hope to bring you back where we can maybe go more in depth on the structure of credit and a few other things, as I have a lot of ideas on that topic. But more importantly, if the people watching, and by the way, full disclosure, I don't get any referral fees. I don't get any piece of the action for sending people to Jana's company, Rescore, for credit repair. So totally full disclosure. Just they have a proven record. She owns the company. And as I like to say, I know where to find her.
Yes, you do. So if anyone wants to get a
So
hold of us, I love it when people look at our website because I really want them to feel comfortable with who they're entrusting their life, their credit with. So our website is rescoreyourlife.com. And know that too, that all of my employees have gone through something. It's funny when I'm interviewing people and I say, do you have perfect credit? I think I want them to say yes. Like they're like, oh, well, I had this. And I'm like, no, no, no. I want you to have gone through stuff because you're going to be softer and kinder with our clients. So all
basically,
of,
they're more compassionate, just
yes,
like, we all have been through hell and back,
yes,
especially those of us who've been in the housing industry for the last umpteen years and survived, for example, '07, '08, '09. I
right,
mean, we've been chewed up and spit out pretty much. And
right, right.
which
So
in
you
the end,
understand.
yeah, it not only toughened us up, but it also made us more compassionate
Yeah.
to the crap that people can go through financially because we've
Yes,
been there too.
exactly. Yeah, absolutely. And so I think that's so important. So check out our website if you like what you see and you think that we're a good fit. If you don't, I have my hands on several other people in my industry. I have no problem being like, check this credit repair company out. I don't mind doing that. There's plenty of business out there, and I'm not a selfish person. So, but to get a hold of us, you can also email us at info@rescoreyourlife.com. Or if you ever want to text and just ask a real quick question, my personal cell phone number, and text works best because I do this type of stuff a lot, is 816-686-9860. I almost forgot. I don't call myself very often.
You're funny, my friend. You're totally funny. Again, Jenna, thank you.
Thank you.
Um, like I said, we'll have to have you back with more
Absolutely.
questions,
Yeah,
obviously. But in the meantime, thank you again and highly recommend. And as always, I appreciate you listening, watching. I want your questions. I'm sure Jana would love to see your questions too. So ask away. You just don't know what you don't know. So there's no dumb questions when it comes to credit or mortgages for that matter or real estate because we all have our little niches in life. So ask, comment below, and if you need to get a hold of us, the information is going to be right there on the screen, and we would love to talk to you in more detail about your personal circumstance.
absolutely.
See you on the next one.